The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. Don't forget, I'll be filling in for the first hour of the Tom O'Brien Show tomorrow, so be sure to join me for that. You can get my show as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Very easy. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Folks, I'm having some problems getting into Tiger TV, so I'm not going to be able to, unless we can resolve the problem between now and the end of the show, I'm not going to be able to show you charts live like I always do. Just having some problems accessing, but bear with me on that. And don't forget about the Tiger Dollar promotion, where you can purchase Tiger Dollars at TFNN.com. You can use Tiger Dollars to purchase any premium products at the website, and depending on the amount that you purchase, you'll get a 20 to 30% match on your money. So a little free money there. You'll also gain free admission to 7 online courses that are coming up. My own hour and 15-minute webinar, Finding New Market Leaders, will be on July 18th. Be sure to check that out. Mark on your calendar, July 18th, Finding New Market Leaders, my free online course. All right. Let's go ahead and take a look at the market here. See where we're at with about 50 minutes left to go in Thursday's session. And let's take a look at the NASDAQ composite to start. We'll see that the NASDAQ, pretty ugly day for the tech index, down close to 50 points, 1.7% to 2825. Volume so far not overwhelming to the downside, but I'll tell you, when you look underneath the surface, a lot of growth names getting hit very, very hard. Seeing some leadership really starting to roll over here, but the NASDAQ taking a pretty hard hit today. Let's check in on the S&P 500 as well. And we'll see the S&P 500 is down not quite as much as the NASDAQ composite. S&P down 13 points, 1% to 1318. Really, what I see happening with the S&P 500 here, you can see the index is really in just a kind of sandwiched in between its 50-day moving average and its 200-day moving average. So you've got the 50-day, which is probably going to be a resistance level in the near term. Only way it's going to be able to get above that, I suspect, is if we start to see some good supply and demand in the market play out here, see some good heavy volume buying. The 50-day moving average for the S&P 500 is currently at 1340, and then you've got the 200-day moving average down here at 1298. So resistance right now at 1340, possible support at the 200-day moving average. But if the S&P 500 does not hold its 200-day moving average, you could see its early June low come into play, which is not out of the question at this point. Then you'd be looking at that 1266 level put in June 4th. So market definitely looking a bit sketchy here, and really the damage done below the surface has been disturbing today, to say the least. And we actually saw some stocks start to roll over yesterday. Well, remember the EU two-day summit starting today on Thursday? Well, it's going to go into tomorrow. I haven't heard one word about Europe today. Really what took the headlines was the healthcare reform. The Supreme Court ruled earlier today to uphold the Patient Protection and Affordable Care Act, otherwise known as Obamacare. Basically requiring that all Americans be insured. The government will be able to expand its Medicaid program as part of the law. but it could not withhold funding for states if they chose not to participate. So that was a slight setback for President Obama. So they'll be able to expand Medicaid program, but the plan will not be able to withhold funding for states if they choose not to participate. Healthcare stocks that benefited on the news, well, HMO providers, PPO providers like WellPoint. Let's check in on WellPoint here, taking a pretty good hit. This is WellPoint Health Network's wild day of trading for this stock, down 4.9% to 66.08. Check in on United Health, another health insurance provider, shares of UNH. Let's see where we're at with United Health. And I'm going to have to go to another source here and see where United Health, recovering nicely off its lows, hit an intraday low of 55.34, but now only down 17 cents to 59.12. But wild, erratic trading in United Health. Some stocks have benefited from this news. Medicaid-focused insurers. Let's take a look at a stock like Centene, which is ticker CNC. Shares of Centene. See where we're at here with Centene, up 2.5% to $30.65. You have a name like Molina Healthcare, that's MOH. Shares of Molina up 7.4% to $22.90, and also Amerigroup, which is AGP. Shares of Amerigroup also having a good day, up 5% to $65.52. So these Medicaid-focused insurers, Centene, Molina Healthcare, Amerigroup doing well, and hospital stocks also doing well today. Let's take a look at shares of HCA, up close to 10% now to $29.17. Hospital stocks really doing well here. HCA, good, powerful, heavy volume breakout today. Really haven't seen much of those lately, and the ones that we have seen over the past week or so have fallen flat on their face. So HCA with a good heavy volume breakout today. LifePoint Hospitals also up nicely, 6% to $40.73. And finally, let's check in on Community Health Systems, up a little over 6% to $22.08. So that's a look at some stocks that benefited today from the Supreme Court ruling on Obamacare. Financial stocks under quite a bit of pressure today. Let's check in on shares of J.P. Morgan. J.P. Morgan down 4% to $35.28. It's been in rally mode since early June, but there's a report out that said basically the bank's recent trading loss could be much larger than expected. Right now, remember, it was initially reported at about $2 billion. And it's like, well, it could be up around $4 billion. I think it was the New York Times that reported earlier today that it could go up as much to $9 billion. So J.P. Morgan under quite a bit of pressure and just so much uncertainty around the banks these days. Let's check in on the XLF. This is the Financial Select Sector Spider Fund. Just good example of resistance at the 50-day moving average. It tried to rally back above the line, failed miserably. It is still stuck below the line. XLF today down 1.3% to 14.10. So this is a similar situation then, pretty much like the major averages, where you've got the 50-day moving average at 14.42. That's probably going to be resistance at this point. Support at 13.78. Judging by overall market action and what I'm seeing, basically the fact that institutions seem more interested in selling stock right now than buying stock. You'd have to think that the path of least resistance for the NASDAQ composite, for the S&P 500, even for the XLF, is down. So I would expect all three of these, the two major stock indices and the XLF, to eventually test their 200-day lines. And if that happens and they break below that support, that could fuel even more selling. So tough to be real positive on the market here. And that is just the way it goes. Remember, we had that lukewarm buy signal from the NASDAQ that was back on June 15th, where we had a 1.3% gain for the NASDAQ on June 15th. And then about 4 days later, we had a real nasty, heavy volume decline for the tech index. Anytime you see selling like that soon after a follow-through day, so you had that sign of strength on June 15th, and then a big reversal, higher volume decline for the NASDAQ on June 21st, and then Monday earlier this week. Pretty rough session, and 2-day rally, and then more weakness today. So definitely selling pressure here. Risky environment to be making money in stocks. I've been lightening up with new positions. I've nibbled here and there, knowing full well that I may have to cut losses short, but it's just a risky environment out there for growth stocks. Taking a look at gold today, down 1.7% to $1,550.40 an ounce. Let's check in on the GLD, the Spider Gold Trust. That is now down 1.4% to 150.75, and gold GLD not looking like it wants to go higher anytime soon. And another tough day for crude oil, down 3.1% to 77.69 a barrel. I think the one positive that can be gleaned from this really crummy market right now is that gas prices are probably going to stay. We'll have to knock on wood here, but gas prices are probably going to stay low and potentially could go even lower. I know in California they're finally below $4 a barrel, not by much, but it wasn't that long ago where our premium was $4.60. Our kind of medium octane was $4.50, and the cheap stuff was around $4.40. So right now we're about $4 or so for the premium high octane gas, but with oil prices not looking like they're going to be heading higher anytime soon, that should continue to keep a lid on gasoline prices. Mentioned volume today, not a whole lot of volume in the NASDAQ. So yesterday on the NASDAQ we had about 1.6 billion shares that traded hands, and we're tracking pretty close to that level right now. So not seeing overwhelming selling to the downside, but still a lot of damage being done out there to growth stocks. In terms of breakouts, very, very tough environment for technical breakouts. We did see a few stocks start to flex their muscles soon after June 15th, but pretty much all of them have fallen on their face here. This is where you really just have to kind of pay attention to the market's message. Not a safe environment, very tough environment to be making money in stocks, and even some that are working. I mean, we could take a look at shares of DaVita, D-A-V-I-T-A, and take a look at DaVita here. You had a recent breakout over right around $90 a share, and the stock continues to perform quite well, actually. It's up about 0.5% today, outperforming nicely to 95.76. But the thing with DaVita is that the breakout occurred in pretty light volume. So it was not an easy stock to buy when it broke out. So, all right, folks, headed into the first break here. Come back and talk about some stocks getting hit pretty hard today, flashing some sell signals. You're listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. I wanted to talk about some charts that are really getting hit pretty hard out here. We mentioned yesterday when I filled in for Tom's show, shares of Chipotle Mexican Grill stock really, took a beating yesterday. Clearly leadership over the past couple of years is rolling over here. Chipotle is still, holding above its 200-day moving average at 368, but stock is down another $17 today, 4.3% to 374.83. 374.83 for Chipotle. I'll tell you, people thinking about buying this stock down here, taking on a lot of risk. You would be buying just above long-term support, but you'd be ignoring the fact that a lot of institutional investors have been selling this stock over the past couple of days, and that's always pretty pretty risky proposition, especially when you're talking about a stock that is up close to 1,000% since late 2008, early 2009. A lot of situations out there where the big money has probably already been made. I would certainly put Chipotle in that category. Even a name like Ross Stores. This is a retailer that really could do no wrong for several months. A discount retailer, but Ross Stores hit pretty hard yesterday. Another big wave of heavy volume selling in the stock today. At some point, institutions are going to take profits in stocks that they've profited quite a bit in recent years, and certainly Chipotle and Ross would be in that category. Eventually, they're going to take profits, and they're probably not going to revisit these leaders. So it's important to recognize these sell signals when they arise. Shares of Ross Stores down another 4.6% today, $2.95 to $60.75. People will point to pretty good fundamentals at Ross Stores, pretty good growth prospects. There's no doubt about that, but there is an expression that fundamentals can often look the best at or near a stock's top, and that is important to pay attention to. Believe me, the Chipotle longs are still out there. The Ross Stores longs are still out there. They're pounding the table saying, hey, growth prospects are still pretty good at both of these companies, but pretty major institutional selling in both names over the past couple of days. Let's check in on Apple as well. Boy, Apple still has its share of fans. I've mentioned in recent shows, anytime I say something negative about Apple, if its technical picture is weakening, boy, the Appleonians come at me. They come at me hard, saying, "What are you talking about? You don't know what you're talking about." Apple just looks like a weak stock to me here. It hasn't completely broken down yet, but anytime a stock starts kind of riding its 50-day moving average, it's not clear that the stock is finding support there. That's pretty much what Apple is doing. It's now below the 50-day moving average, down 1.4% today. Volume not overwhelming to the downside. I mean, volume has dried up in this stock for quite some time, but it's down $8 today to $566.47. $566.47 for Apple. And you'd have to think at this point that it's low. Put in a low of 548 back on June 4th. That would be in play. You undercut that, then you've got the 522 price level that was set back in mid-May. 200-day moving average all the way down at 485. That would be a pretty stiff sell-off for Apple. But stock is definitely vulnerable here. Worth paying attention to. Certainly a very risky long opportunity at this point. Let's also take a look at shares of Intuitive Surgical. Intuitive Surgical also vulnerable here. Same sort of situation. It broke below its 50-day moving average. It tries to rally back for about 7 or 8 days now. It just has not been able to get back above that 50-day moving average. Stock is down 2.3% today to $531.83. Another former leader with pretty good fundamentals. They've got that great product, the Da Vinci robotic surgical system. Well-managed company, high return on equity. Fundamentals still look pretty good, but it is a stock that is weakening considerably from a technical perspective. Let's check in on shares of Vertex. Vertex Pharmaceuticals. Interesting story here. Stock is getting hammered pretty good, down 18.7% to $49.67. So it's down $11.44 to $49.67. The company released some data earlier today. It's two-drug therapy significantly improved lung function in patients with cystic fibrosis, but some analysts are questioning the data. Remember that Vertex released interim data of the combination therapy in May that it revised 3 weeks later, saying there was less benefit than initially thought. Still some questions about this drug and its efficacy. Shares of Vertex down pretty hard today, almost 19%. All right, folks, stick with me. We'll be right back. Breakout Investing on TFNN.
In December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Don't forget, folks, if you want to get a 30-day free trial to Ultimate Growth Stocks. That's my growth stock newsletter. You can do that at kenshreve.com. That takes you over to the TFNN page, my information page. You can click on the green banner there, get 30 days free. It's a weekly newsletter where I publish every Tuesday, and then in between updates I send out email, buy, and sell alerts when I'm either adding a stock to the model portfolio or selling a stock for whatever reason. Turnover has been relatively high in the portfolio recently, just kind of being nimble with a volatile market. Do believe the trend is downward here, so I'm going to be I've been taking my foot off the accelerator for quite some time. Have a pretty big cash position in there right now. Just really at this point waiting for the market to sort itself out. Market's not going to go anywhere until institutional investors out there, whether they're fund managers or insurance companies or banks, they're going to have to feel comfortable stepping in from the sidelines and putting money to work. Clearly, they're not ready to do that right now with all of the uncertainty that is out there. We did have a layer of uncertainty get cleared away today with the Supreme Court ruling on Obamacare, but think of all the other levels of uncertainty that are out there. Whether it's Europe, we got corporate earnings season that is right around the corner. Companies will be closing their books at the end of June, and then we'll see a slew of earnings reports towards the end of July. And I'm a glass half full guy. Tend to try to find the silver lining in things, and I'm really trying to believe that second quarter earnings season is could come in better than expected, and if so, that could be a catalyst for the market. But I'm just not really feeling that comfortable that we're going to see good earnings reports. I think there's a possibility we could see some tepid outlooks, and anyway, we'll see how the market responds to earnings. But I can't help but look at Bed Bath & Beyond. Remember, they reported earnings, I think it was last week, and the stock, absolutely got crushed on June 21st. Lukewarm results, kind of a tepid outlook, and Bed Bath & Beyond has been one of the, the strongest retailers out there. So what is that? How are we supposed to feel if, with Ross Stores or TJX companies that have been under, quite a bit of selling pressure over the past couple of sessions? I mean, is this flagging, slower growth ahead? So when it comes to second quarter earnings season, hopefully we'll see good news. I'm sure there will be bright spots, but kind of tough sledding right now. Let's check in on shares of Arena Pharmaceuticals, ARNA. Remember, Arena was a company that was in the news yesterday. Its weight loss drug got approved by the FDA, first drug of its kind approved in almost 13 years. There's some optimism that Vivus will get its drug approved as well. That decision is due in mid-July. But Arena hanging in there pretty good today. Well, relatively speaking, and this is a stock that was a $3 stock 2 months ago, has run up to $11 a share. Right now, down $1.16, 10% or so to $10.23. Amazing that its 50-day moving average is all the way down at $5.92. So, from what I can see in its daily chart, it would be perfectly normal for Arena to pay a visit back to its last swing point, which is, right around $7 a share. It may not get down that low, but I would avoid buying the stock up here. I got a lot of calls about Arena yesterday. It's a very, very extended stock at this point, and you generally don't want to buy extended stocks. That's an easy way to lose money. Looking at a weekly chart for Arena, the last time to buy it was when it broke out of this kind of a rare high tight flag pattern, and I pointed out there's a flagpole basically that formed when the stock went up about 100%, made a big move. And this was several weeks ago. The stock was up 100%, and then for about 3, 4, 5 weeks, it just moved sideways and basically formed the flag area. So the big weekly percentage gain for Arena occurred during the week of May 11th, and then the week of May 18th. Following week, 4 weeks after that, it formed the flag area, basically corrected about 22% off its recent high, and then it broke out over $7 a share, and that was the buy. So if you didn't get it there, and you're thinking about buying at $10, $11 a share, you are chasing here, and that is that's an easy way to lose money. Check in on Family Dollar stores here, FDO. Here's a stock that reported earnings earlier today. Decent bottom line and top line growth, but kind of a tepid outlook. Earnings were up 16% from a year ago to $1.06 a share. Sales up 10% to nearly $2.4 billion. The dollar retailers, whether it's Family Dollar stores, Dollar Tree, Dollar General. Again, when stocks move, they tend to move in groups. Some will say that Dollar General is probably one of the better run dollar retailers out there. I know Dollar Tree has its share of fans, but Family Dollar store is down 3% today to $66.97. It broke below its 50-day moving average, so definitely, from a technical perspective, acting weak. It is trading in the upper half of its trading range today. It's recovered off a low of $64.99, but let's take a look at Dollar General. And we'll see that Dollar General has also recovered off its lows. It's now only down about 32 cents to 53.70 after hitting an intraday low of 52.61. The dollar retailers also big leaders in recent months that look vulnerable to me here. Starting to see selling pressure building in these names. Remember, sometimes when the old leaders get ushered out, new leaders come back in. So it'll be interesting to see if the dollar retailers are ready to surrender their leadership. It looks like it to me, but it might be too early a call to make here. Checking in on Dollar Tree, it is also down 2.6% to 52.10. Broke below its 50-day moving average today. It is trading up near its high, but still down 2.6%. So dollar retailers having a rough go of it. Let's check in also on MNST. This is Monster Beverage. MNST, Monster Beverage, another former leader that is facing quite a bit of selling pressure here. Monster Beverage. See if we can get a quote here for Monster Beverage. Right now, that stock is down 4.4% to $68 a share. Another break below the 50-day moving average here. So a lot of these stocks that had been holding up, you're wondering when they were going to start coming down in price. Monster Beverage, Chipotle, a lot of these huge market leaders. I mean, several 100% gains over the past couple of years, finally starting to look vulnerable here. So Monster Beverage gives up its 50-day moving average today. And how about Lululemon? Lululemon Athletica. This is a stock that really has just been taken to the woodshed lately. Shares of Lulu down 5.6% today to 58.37. Rumor here that David Einhorn, he was a guy that was shorting Green Mountain Coffee Roasters. He's sort of a noted short seller. There's a rumor out here that he has taken a short position in Lululemon. High multiple stock here, certainly vulnerable, but boy, its technical picture has really taken a turn for the worse. Again, Lulu down 5.6% today to 58.37. It broke convincingly below its 200-day moving average today, so that is a problem for Lululemon. Some of the big generals getting taken down here. Not surprising. Remember Alexion, one of the breakouts that had been working. Alexion kind of having a rough day today, down 3.5% to 96.03. Stock had been acting very resilient, but trading near its session low. Volume not overwhelming to the downside, but Alexion finally getting hit with some selling pressure today. Alexion, its key drug is Soliris, which is used to treat a couple of rare blood disorders out there. So Alexion also having a pretty rough day today. So let's check in on some economic data earlier today. I wanted to get to that. We had weekly jobless claims down slightly from last week to 386,000, mostly in line with expectations. The prior week was revised higher to 392,000. So that wasn't the best of news. Really, you really have to wonder what the market is pricing in here. I mean, at some point, the focus was on Europe. My take is that this, the economy, we've got the jobs report that's coming a week from tomorrow. The June employment report. And unfortunately, I think there's a chance we could see another disappointing number here. The market may be pricing in the fact that economic growth in the second half of the year may not be as good as some are expecting. Remember the Fed in its last meeting, they lowered their economic growth forecast for 2012 to 1.9% growth to 2.4%. Who's to say that they're not going to lower that again to 1.5 to 1.9? Or I think there's probably a good chance that could happen, and the market could be in the early stages of pricing that in. So you really have to wonder what is causing the fuel behind the selling today. It's not just that Obamacare was upheld. I don't think that has much to do with it, but anyway, well, as we check in on the markets here, I'm seeing a pretty impressive turnaround. We've got the Dow now down 45 points to 12,581. Pretty impressive performance by the NASDAQ. It was down by almost by as much as 2%. NASDAQ now down only 1% to 2844, and the S&P 500 only down 5 points now, 0.4%. So I'll tell you, these fast-moving markets hard to keep up with, but seeing some pretty compelling action here as we head into the close with about 10 minutes left to go in Thursday's session. So having some internet issues here, so I appreciate you bearing with me. Just trying to get quotes, trying to get things to work, but haven't seen any news as to why the big turnaround here. NASDAQ still down 1%, but it could be news out of Europe. I'll try to track that down for you within the next 10 minutes. But a nice turnaround happening today. Let's check in on shares of Costco too. Costco is a stock that definitely had my attention here. It got an upgrade from Deutsche Bank today to buy from hold. Shares of Costco up 1.7% to 92.85, and Costco looking pretty good here. Definitely a technically strong stock. You've got a nice little breakout taking shape here over 92.67, and I'll tell you what, breakouts are really just not working at all. For every one breakout that's working, 99 aren't. So kind of have to accept that that's the way the market is right now, and that's why I've been keeping my powder mostly dry. But Costco, really technically a strong stock. Let's check in on the weekly chart for Costco. And again, we'll see that swing point of 92.67. The stock is right now trading at 92.85. So is it a buy here? Well, I would say if the market were in an uptrend and uncertainty were not as rampant as it is right now, I think it would be worth a nibble. But again, if you're buying breakouts and you're having to cut losses 2-3% below what your purchase price is, market's clearly telling you that breakouts aren't working. It really doesn't make sense to throw good money after bad. So I kind of hold off, wait for a new buy signal from the major averages before you start nibbling at some of these heavy volume gainers. But Costco having a outstanding day today. Also, in terms of economic data, we also had the third estimate to first quarter gross domestic product. Came in as expected, 1.9%. So that was no bad news there. Coming up tomorrow, we've got personal income and spending for May, the Chicago Purchasing Managers Index for June, and also the final reading on consumer confidence from the University of Michigan. That's going to be the final June reading. All that is due tomorrow. Taking a look at some other stocks here under pressure. Probably seeing a nice little rally here. Shares of MasterCard still trading down near their session low, down $10.59, 2.5% to 421.33. Another stock that gave up its 50-day moving average, tried to rally back above it. It is now trading below the line again. Trying to rally back with the market here, but again, MasterCard still trading near its session low. So So many growth stocks out there having problems. Again, the lesson here is that when your old leaders come under pressure, these stocks that are up 300, 400, 500, 600, 700% or more, eventually they're going to surrender their leadership positions. You don't want to be in these stocks when the market starts to rally again. You want to look for the strong price performers that are ready to move higher. Still waiting for that to set up. We'll be right back, folks. Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, headed into the final few minutes of trading here. Let's see where we're at. Nice recovery by the market today. I'm not sure what exactly that means, but the Dow down 37 points now, 12,589. Nasdaq down 1% to 2847, but it's recouped almost a full percentage point since I came on the air. So some nice buying in the Nasdaq here. S&P 500 down almost 4 points to 1327. So have some earnings reports after the close. Let's check in on shares of Research in Motion here. Company, a lot of problems with this company that have been noted in recent weeks. In decreasing market share, stock is just in a world of hurt here. Trading around $9.13, down 5 cents ahead of the report. Consensus estimate is for a loss of a penny a share. That compares to $1.33 it earned in the year-ago quarter. Sales down 37% from a year ago to $3.1 billion. So we'll see what Research in Motion has to say. The bulls are going to say, listen, all the bad news is priced in here. It's only a matter of time before Research in Motion announces some sort of, I don't know, whether it's a strategic partnership. Are they going to break the company into pieces? Is a name like Facebook or Amazon going to step in and buy some of its assets? It remains to be seen at this point, but should be an interesting call from Research in Motion after the close. Let's also check in on shares of Nike here. Nike also reports after the close, and shares of Nike right now down 1.5% to 96.96. Amazing the price destruction in Nike. I mean, just a high quality growth name here. Not a super fast grower, but just a very well run company. But I mean, this stock is broke below its 200-day moving average last week, so it was a $114 stock. Now trading around 96.66. So a lot of selling pressure in Nike. They're expected to earn $1.37 a share. That compares to $1.24 earned in the year-ago quarter. Sales should be up about 13% to $6.5 billion. And why don't we also check in on Accenture here, ACN, another high-quality name here, good high-quality consulting firm. Shares of Accenture, let's see what Accenture is doing here, up 1.4% to 56.63, volume of 4.1 million shares. Accenture should earn 99 cents a share, up from 93 cents in the year-ago quarter. Sales up close to 7% to 7.2 billion, call it. So that's what we have there. Shares of Starbucks too. I wanted to touch on Starbucks. I mean, this was another stock that not that long ago people were just watching it go higher and higher and higher. But Starbucks continues to face a lot of selling pressure here, down 1.2% today to 52.10. Another stock that has broken through support levels, technically very weak, and it's it's very risky trying to catch stocks like this on sale. You really don't know. The recent selling pressure that we've seen in the market, is it just a sign of more to come? Is the U.S. economy really the possibility of it slowing more than some might expect in the second half of the year? I mean, that's a distinct possibility. Bottom line right now, like I said, institutional investors are more interested in selling stock than buying stock. I think the risk outweighs the reward in this market, so not interested in doing a whole lot right here, and I think that's perfectly fine strategy. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Join me tomorrow. I'll be hosting from 4 to 5. Take care, folks.